Today we're going to talk about restricted stock units. Restricted stock units, or RSUs for short, are an employee benefit that many companies offer to their employees to incentivize them to remain with a company for a long time or to hit performance goals. So it's really important to understand how these work because these can be a great way to build wealth for the long term. In this video, we're going to look at how RSUs are granted. We're going to look at how these RSUs vest over time. We're going to look at what happens when they vest, and what I mean by that is what happens from a tax standpoint when they vest. And then finally, we're going to look at what you can do with the stock once it fully vests and it's yours. Now, there's a lot of details that go into this, and I created a blog post that you'll see linked to below in this video that really goes into the RSU strategy in great detail. So check that out after you're done watching the video. Let's dig into how this works. The first thing we'll talk about is how RSUs are granted. Now, companies give you RSUs in order to incentivize you to work hard, grow the company value, and stay with them for the long term. So what they might do, an example if we use Jane here, is they might come to Jane and say, hey Jane, on January 1st, we are going to give you 1,000 shares of restricted stock units. Now that has no value to her on the day that they give her. All those 1,000 shares of restricted stock units do is say, hey Jane, we promise you to give you 1,000 shares of our stock at some point in the future. Now, once the company gives you your RSU grant, they will usually tell you, here is the vesting schedule for when you'll actually get the stock. A vesting schedule is nothing more than them saying, hey, we're granting you the right to 1,000 shares, but you're not going to actually earn those shares until some date in the future. The most common examples that we see from a lot of companies is for RSU grants to vest over 3 or 4 years. So if we go back to the example of Jane here, her company might tell her, we're going to grant you 1,000 RSUs on January 1st, and then in 1 year, 250 of those shares will become yours, which means they will have value to you. And then 2 years later, another 250. 3 years later, another 250 shares, until the 4th year when the final 250 shares of the RSU grant become Jane's for herself. So this is really a way to incentivize employees to stay with their company, to grow the value, because say the stock is worth $10 today, this grant has a value of around $10,000 on the day that Jane gets it. But if the stock price grows to $15 or $20 or $30 in the future, you can see that these future grants, once it vests, will have a much higher value than what it has today. Once those shares vest for Jane, it's important that we look at how those shares are taxed. If you work for a company that gives you stock options as well, you probably know that the taxes around stock options can be really complicated. The good news is with RSUs, the taxation is a lot simpler and they do a lot of the legwork for you. So let's go back to Jane. Let's say she got her grant on January 1st of this year, and now we're 1 year later, and she vested 250 of those shares. So on the day that she vests, she gets 250 shares, and we'll say the stock is worth $10 a share at the time. So she gets stock worth $2,500. Now that is money that is hers, and she can do whatever she wants with it. But from a tax standpoint, what they do is they treat RSU vesting much like they do your salary, where you get your gross salary and then they take out all the taxes and other deductions that go along with it. So when these shares vest for Jane, she's actually not going to get 250 shares. What's going to happen is her company is going to say, well, now wait a minute, we're first going to withhold some of those shares to pay for federal taxes. So normally that's around 22% of whatever the amount of shares that they get. In this case, that would be 55 shares. And then if they live in a state that has income taxes, they might say, hey, we're going to withhold those taxes as well. Here in Illinois, it's right around 5%. So they might say, we're going to withhold another 12 shares in order to pay state income taxes. And then finally, RSUs, when they vest, they are subject to FICA, which is Social Security and Medicare taxes. So that takes out another 19 shares. So what actually happens on the day that Jane vests those 250 shares is all at one time, her company will take out all these taxes, and then she will get 164 net shares. Now these 164 shares, at that point, she can do whatever she wants with them. So that is money that is hers. So that's really how the taxation works when RSUs vest. So one of the last common questions that we get is, okay, once I get these shares, what should I do with them? There's really two things you can do. What we normally recommend in most circumstances for our clients is to just go ahead and sell the shares right away. And the reason why we recommend that normally is because we want to make sure that your investments are well diversified and you're not overly concentrated to your employer. So what you would do, Jane would get her 164 shares, she would sell them right away and invest all those proceeds in a diversified mutual fund or exchange traded fund. Another option is you can keep them. You can keep them for the long term. If you think the stock price of your company is going to grow a lot, then you can keep them, and in the future when you go to sell them, you'll pay capital gains tax on whatever gain that you had on that. So I hope this video really helped you understand the basics of restricted stock units and how the taxation works around that. Again, as I mentioned at the beginning, we have a blog post below that's linked to below that you can check out to learn even more information about all this. And we also link to our website and other resources to really help you get a grip on your finances so that you can make great decisions. Thank you for watching this video, and we'll see you next time.